Welcome to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. I appreciate your time listening here on the Professional Edge. What we're talking about is junk drawer resolutions. We all have one of these, and as soon as we open it up, we want to close it as soon as we can. If we can actually close it, we have to sort of push things and move things around. Hopefully it'll close, but man, it's the magic drawer that we look for crazy things. And we've always said, hey, you know what? I'm getting ready to clean out that junk drawer. It's a new year. Well, let's apply that to your financial planning, your estate planning, and your income tax planning. So we were talking about your 401k beneficiary designations. That is part of your junk drawer planning for 2023. Let's clean that up because a lot of individuals that come in, meet us here at the Cunningham Center or via Zoom, show us their beneficiary designations, and they're like, oh yeah, I do recall that, and I put my first two children down there, but lo and behold, I have a third child, and I forgot to add them on the beneficiary designation as a contingent beneficiary. Well, if that's you, you know that. Not me. You have to address that. No one else is going to correct that for you. That's part of that junk drawer planning that we're going to look at in 2023. So let's make sure that your beneficiary designations, being primary and contingent beneficiaries, are correct, because now default, if there is no contingent beneficiary, then it becomes part of the estate, and with the estate, then it has to be distributed out within 5 years date of death. So that doesn't make sense, because if we designate a beneficiary, number one, we can have a spousal rollover, and therefore we would then reset that for the spouse's lifetime. No mandatory distribution. Or if we have children, then we can at least get 10 years on that stretch IRA for those 10 years, so it has to come out in that 10-year time frame. But the bigger story is a lot of our listeners here on the Professional Edge, the largest asset that they have, the largest financial asset, is their 401k. And you're simply planning that $750,000 million IRA with a simple beneficiary designation. Number one, you could easily disinherit your children, because if you name your spouse as being the primary beneficiary, and then you pass away as the account owner of that 401k, yeah, they do a spousal rollover, no tax consequence. Sounds simple and easy. But what happens when the surviving spouse remarries and they do the same exact thing? A simple, easy plan. They name the spouse as being the primary beneficiary, kids as contingent. Sounds good to me, right? But lo and behold, that surviving spouse passes away, and that new spouse is going to now inherit 100% of the first spouse that passed away, the entire 401k or the IRA, because we did a spousal rollover IRA, and the kids of the first marriage are going to be 100% disinherited. Now, if that's of concern to you, that's part of your junk drawer planning. You need to address that, because what we can do is actually have a trust as the beneficiary of that 401k. And when the owner of the 401k passes away, then we just basically stop the money into a trust for the benefit of the surviving spouse. But if the surviving spouse gets remarried, they do not have the option to name the new spouse as being the primary beneficiary, and therefore you avoid disinheriting your children. And if you don't think this happens, trust me, I've done 2,500 estate plans and still counting, and it baffles me that the largest financial asset is controlled by a simple beneficiary designation, and then we run the entire risk of disinheriting the children of the first marriage. And if that's of concern to you, or you say, you know what, my kids are scoundrels anyway, I'm going to let it ride. I trust my surviving spouse. Yeah, you can trust your surviving spouse, but I'm not sure if I trust the new spouse that's coming in. And that's the concern. You love each other, but what about that new person? And you got to face reality. If someone passes away prematurely, there's a high probability that they're going to get remarried. We're seeing marriages in our office of individuals being in their 80s getting remarried. Yes, I'll say that again. They're in their 80s and they're getting married again. Guess what? Then they come in and they say, I want to update my beneficiary designations to my spouse. So we can do a spousal rollover because they've heard about this tax consequence and they want to be able to do a spousal rollover to avoid the distribution of their 401k IRA. So sure enough, the new spouse gets named as a primary beneficiary because it's tax planning. They aren't even concerned with the other side because they now trust their new spouse to take care of the children of the first marriage. Well, let's not even put that in play. Let's go ahead and open the junk drawer on your 401k or your IRA beneficiary and address and make sure that we clean that up in the beginning of 2023. In order to get that started, give our office a call at 877-654-9798. That number again, 877-654-9798. It is significant. It's the largest financial asset in which most of our listeners here on the Professional Edge have, and it's a nilly-willy primary beneficiary is one line, and then there's a contingent beneficiary, another line. And you may have missed a child. You may need to, put this money in trust for your children because, again, there's a 50% plus chance that your child's marriage is going to end in divorce. And yes, it's part of asset protection. You've worked your 30 years and you've accumulated $1 million inside your 401k. I'm not sure, you want that to go to your ex-son-in-law or ex-daughter-in-law if something should happen. So in order to do that, what we do is place a trust up for the contingent beneficiaries. They have access to it. They can withdraw it, yes, and there are some required minimum distributions for that. But if something happens, then the ex-son-in-law or ex-daughter-in-law cannot make a claim against those assets because, quote, they're not really theirs. It's not part of the marital property. So again, if that's of concern to you, think about it. You have two children, $500,000 apiece. You don't want $250,000 to go to the ex-son-in-law to let him ride off into the sunset. So again, if that's a concern to you, give our office a call at 877-654-9798. That number again, 877-654-9798. So that's the junk drawer of your 401k beneficiary. Simple as that. One subject, one thing. It's those pair of scissors that are in your junk drawer. So let's turn to the tape that's in the junk drawer. That is the allocation of your 401k/IRA. 2022 was very trying for you as an investor in the markets. There was no real place to hide because the S&P 500 index returned minus 19+%. And then we say, hey, I'm tech savvy. I love Amazon. I love Oracle. I love Microsoft. Well, if you were in the NASDAQ, then you suffered a 33.1% decline for 2022. And you say, wow, how can that happen? Well, some companies, we all look for earnings and earnings expectations and projections, and it just wasn't there in 2022. We're feeling the effects of the Fed interest rate rise. We're at now 4.25 to 4.5. It's the most aggressive rate increase in history that we've had for the Fed. And I don't think they're done. I think they're going to continue as this inflation continues to go on. Well, lo and behold, the effects of these interest rates rise, or we're starting to see some of that in the real estate sector. Housing is slowing down. Yes, we had it's not the housing bubble of the 07 to 09 for that crash. It was realistic because people had zero cost on borrowing. I mean, it was less than 3%. You had, 2.75 on a 30-year mortgage. That's free money. Excuse me. So when you look at that, you say, all right, what is my 401k allocated to? Well, by default, we're seeing a lot of individuals They set it and forget it. Well, that's not going to be the case going forward, or it should be the case even starting. So if you set it and forget it, well, that's part of that junk drawer. That's the tape in the junk drawer that you need to reallocate your 401k. And a lot of you will look at these life cycle funds, 2020, 2025, 2030, 35, 40, 45, 50, and on down the road. And you'll just pick one of those and you'll say 100%, 100%, 100% goes to those, because I look at this pie chart and magically there's large cap, there's small cap, medium cap, there's international funds, there's bonds, there's cash, and they're just going to take care of it. Well, sort of like a diet. Are you going to dictate or allow somebody else to take care of it for you? No. It's your responsibility, because when you retire, then whatever that fund is going to be your retirement assets. So if that's important to you and you are just placing things in a life cycle fund, you definitely need to give our office a call, because we'll show you some downfalls of those life cycle funds. It doesn't matter whether you're in a Fidelity, Vanguard, T. Rowe Price life cycle fund. We will show you some concerns that we have and let you make that decision whether that's appropriate for you or not. But it's amazing how people just don't understand what's going on. It's easy. It sounds good. 2040, that's when I think I'm going to retire. Boom, I'm putting all my money in there. Well, if that's you, do give our office a call at 877-654-9798. That number again, 877-654-9798. So we have the allocation within the 401k. We've addressed the beneficiary designation on your 401k / IRA. And let's say, the other part of the cats and dogs, you have multiple little nuts and bolts within that junk drawer. Well, those are your old 401ks or IRAs that you have at the sundry of firms. Yeah, one year you were working with a bookkeeper and they said, hey, you need to put $2,000 in your IRA. It'll save you some money on taxes. Excuse me. And then you do that and you forgot where that is. You get the statements, and lo and behold, you haven't opened one of those statements in the last 7 years, but you know it's there. Or you had a job, you had a 401k, you left that, and you just said, hey, it's in a life cycle fund. We're good. I'm okay. I'm in a new place. I'll get to it one day, right? Just like this junk drawer. You just keep putting stuff in it, but you never really address what's in there. You know it's there, but it's not being managed properly. So again, that nuts and bolts is going to be all your cats and dogs of your various investment accounts. You may have opened a self-directed account. Then you said, I'm not going to do that no more. I'm going to open an after-tax brokerage account at some trading firm that you want to do. So you open that up. Nothing is consistent. So therefore, we have these cats and dogs. It's the nuts and bolts inside this junk drawer. So it's time to pick those out, sort them, and get them cleaned up and consolidate them. That way you can actually make better financial decisions. So if that's you as a listener here on the Professional Edge, let's adjust those nuts and bolts, those cats and dogs of old accounts that are not being managed, not being looked at, because in 2022, we had a 19% drop in the S&P, a 33% drop in the NASDAQ. It's time to hit the reset button. To do that, give our office a call at 877-654-9798. That number again, 877-654-9798. More coming up here on the Professional Edge. I appreciate your time and listening in.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Scene Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.